what's the impact on commodities on a possible huge market crash in China? The one who's going to respond that is Mike Zuzolo, president of Global Commodity Analytics, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you're new here, make sure you subscribe. So, Mike, how are you today? I want to start by a general overview on commodities and then get into the specifics of several financial problems the second largest real estate developer in China is having right now. So, with potential setbacks for the financial markets there and around the world.
Yeah, and in some metrics, they are the largest property developer in China. And I think that speaks a lot about not just Evergrande's potential bankruptcy and the reverberations that that could throw into the financial markets and the global economy, but it also, I think it shows also, Luis, the idea that China is, I think, more vulnerable and has been more vulnerable this past year to some major setbacks. And what I mean by that is, Evergrande by itself, I think, is about $305 billion of debt in bonds that the market is worried about it not being able to repay. And why that means more in China is because the real estate market in China can be about 25% of the gross domestic product. And just yesterday, or I guess it was just today, I take that back, just today, Goldman Sachs cut their 2022 gross domestic product for China from 6.2% to 5.3%. So that 9/10 of a percentage cut in GDP really opens the door for some pretty mass unemployment. Most of us in the analytical world feel as though that if China's GDP goes too much below 6%, you're going to have unemployment start to creep in. And at 5.3%, that's very dangerous levels, on top of the fact that China's government has clamped down on their technology sector, their financial services sector, and also their education sector. And the education sector in particular, a lot of people have been trying to get jobs after college teaching English or teaching mathematics for private schools in China. And so this is a big deal. And it's not just about Evergrande. And I would also say to you, it's pretty important to know that housing makes up about 75% of household wealth in China. And so there are already protests going on in Hong Kong right now, and those protests could go ahead and increase in mainland China and put a lot of pressure on the CCP and President Xi. And this is where it goes back to the commodities between the global economy and that property sector and real estate sector being about 25% of GDP. This is why the copper is hitting a 1 month low. This is why we're seeing the wheat find weakness along with the copper, not just from a standpoint of copper by itself and what's going on with Evergrande, but also the idea that the dollar could become a safe haven asset. And that's what the chart that we're providing this week in our video commentary, when you look at the close relationship of how the copper and the soft red wheat in Chicago trades, you can get an idea of how closely tied they are to one another, and that the wheat market's very important to the overall mix with the industrial metals.
And why are they so tight?
Well, I think it goes back to the currencies, and I think it also goes back to wheat is the global agriculture commodity. And I think the funds and the investor class believe that if the commodity demand in agriculture is going to be strong, it's going to start with wheat, because wheat would be the last one that would have the least amount of supply. In other words, there's so much competition around the world. Russia and the Baltic states are now well ahead of the United States in exports and wheat. They're starting to catch up in corn as well. And obviously you have a pretty sizable crop in Brazil. You have a decent crop in Argentina. You have a very big crop typically in Australia. Then there's Canada. So you name it. And China itself has a pretty sizable wheat crop as well. So I think investors, if they really get behind an agricultural commodity demand-led market, they're going to work it from a standpoint of the wheat needs to be there, and that's why it's a good barometer.
Yes, and still in the macroeconomic view, I would like you to assess how would that impact on future decisions of the Federal Reserve in the United States.
Yeah, this is where there's several things hanging and looming out there for the Fed that makes me think that they are not going to taper too quickly. And we're going to find that out by the time this video goes to air and gets published, because they're going to be speaking on Wednesday. And I think the market is expecting some hints as to whether they will taper and cut back on their bond purchases by November, which the market is kind of, I think, baked into the price of bonds and the dollar and the stock market, that somewhere around November, December will begin the tapering. I don't think they need to be doing that, given the fact that we've pulled back on the unemployment, the jobs numbers, they've gone down. Some of the housing numbers have gone down. The consumer price index, some of that has flattened out. And especially if we don't get a fiscal stimulus bill out of the Congress and we have a debt ceiling issue at the end of this month. And then you throw on top of that China and Evergrande and the susceptibility of some financial reverberations through Evergrande and the real estate sector in China, and already some weakness in China's economy and financial markets before Evergrande even really became an issue in the marketplace this week. So I think the Fed has plenty of reasons to say, let's just do a steady as she goes type mindset and keep that $120 billion coming into the money supply until we see better times that make us think that this inflation is more demand led, or that we have interest rates that are starting to really wanting to go up, and we need to tamp that down. Right now, I think you can make an argument that we have a very vulnerable economy, especially if you throw on top of that COVID and the Delta variant. Some of the most recent national restaurant news and analysis from the National Restaurant Association is about 1 in 6 consumers are outright not going out to eat as of August, and going out to a restaurant at this point because of the Delta variant. And so some of the restaurant data and food eating data has flatlined as well because of COVID.
And we have a chart regarding the soybean meal price in China and versus the soybean meal price in the United States. And there's a clear recent detachment from one place to another. It makes me wonder if the GDP growth in the United States for the first time in almost 30 years is going to be higher than China is somehow related to that.
Yeah, I think that's a really valid point. And I think that's where it goes back to, there are certain sectors that we could see an improvement in demand, especially given the prices. It was 3 months ago and we were rallying sharply in the United States. It was really about, are we rationing demand too quickly? And I was nervous about that. Well, when it comes to the soy meal in this chart, and as you say, you see the upward movement of the Chinese meal price and the downward movement in Chicago. That's a big divergence. And then that chart goes back to 2011. And you don't see that kind of a divergence, going back the last 10 years, not like what we're seeing right now. And so it really shows us that the Brazilian meal price, soybean price, the US soybean price, US meal price are very competitive, and they should be attracting more demand. And so I think this is really important to keep an eye on, because maybe China is going to have a slowdown and have issues economically. And the copper and the wheat do have problems with funds not wanting to invest, but the real demand may actually stay steady and actually go up. And I think this is a real potential bright spot in the market. And I think I wanted to present this chart to you this week, and the viewers this week, because not only is this kind of a divergence in price so rare, and so we need to keep an eye on it, but also in case the yields here in the United States are not that good in soybeans, I think it would really mean a lot to the Chinese to want to buy extra soybeans and get even maybe some meal bought and bring it over to the Chinese ports once they can get back on their feet, after COVID, and what that's done to their infrastructure over there. So, I mean, I think this is something that really needs to be watched. And I'll add to that the issue with Brazil. Now, my understanding is the La Nina, the dry weather in southern Brazil, that's supposed to be alleviated and relieved here in the next 7 to 10 days. Is that something that you guys are watching down there as well?
Yes, and we also have some important issues coming out of Argentina with the negative result of the primary elections for the government. It seems that this is stopping or just, I guess, relieving the tensions between the agricultural sector and the government, and they are seeking a resolution that will bring more exports that were really controlled by the government, and yet it's almost certain that Argentina will supply more corn into the market than this year.
Yeah, and this is something we touched on last week, was that the government is going to be more potentially conciliatory towards the agriculture sector and maybe lower some of their export taxes. And so this is again something that has to be weighed when it comes to, we've probably got about a 3 month window that the trade will probably remain very patient to see how the South American weather shakes out. But if the South American weather starts to become ideal, and the growing season looks like it's going to get off to a good start, we could transition very quickly, especially if the dollar currency is rallying against the Brazilian real, and obviously it's been rallying against the peso, and keeping us uncompetitive here in the United States. And so these are all factors that keep me in the mindset of hedging rallies, hedging profit. I'm hopeful though that we can get a little bit better price action out of the soybeans because of what the Chinese data is showing right now as far as soybean prices and meal prices. And they are trying to rebuild their hog herd. And we have, after all, dropped substantially. So I would like to see the November beans try and get back up above $13 and break through that 1305 resistance after the grain stocks report at the end of this month. And with that having probably underneath it as support yields that are mostly disappointing in the central and western corn belt. I think it's almost a must have at this point, or almost a necessity to have that to underpin you fundamentally to be able to see that kind of a move back up and be able to reach up 40 cents, test support, and then go through it. And then I think if you can get another 40 cents on top of that, get closer to 1350, 1340 area in November beans, or 1340, 1350 in January 22 beans, those are target prices I think are good to make some sales.
And what's the outlook you are seeing for corn specifically?
Yeah, the corn market is kind of tied to the wheat still. We are still hearing some pretty disappointing yields from central Illinois all the way to western Illinois. And I think eastern Missouri is going to show that as well. I was in eastern Missouri on the Illinois border at the Mississippi River on Monday, and I was amazed at how fast the corn was being harvested. The USDA's progress report showing 10% harvested is we're well ahead of that already. I think that's an old number by the time it got published because of how strong this central corn belt is harvesting. Eastern corn belt, western corn belt, those areas will start to pick up harvest very, very quickly here in the next few days if they don't get rains. The yields right now in our area are very, very strong in the corn. Again, dry corn, 18, 19% moisture from the clients I've talked to this week. Yields are very strong. They're very happy. The Iowa yields so far are very strong as well in most areas that are harvesting right now. So you still have an issue with Illinois. And I still am wondering, like we talked about last week, if the Illinois crop is not doing as good as farmers thought they would, what it would do. Will those states that are adjoining Illinois, like Missouri, like Indiana, and on over to Ohio and down in Kentucky and Michigan, will these states that are supposed to have record yields also come down in terms of their yields in the next 30 days? So I think corn is very, very well valued. I would think that the $5 level, the 4.90 level is very good support at this point. I've been talking to clients about if we can get the wheat market to find a low and the dollar to find a high after this Federal Reserve update. We may be in store for some bottoming price action after the grain stocks report. I think the grain stocks report should be the most friendly for the corn because of how much we've drawn down in quantity earlier in the year, and the fact that we've priced in quite a bit of negativity from the Gulf of Mexico being so damaged by Hurricane Ida. So hopefully it'll be a sell the rumor and then buy the fact after that number comes out.
And yet, the October report from the USDA is right around the corner.
Yeah, exactly. That's where you've got, I think, a window of opportunity to find some short covering, and but you take advantage of that short covering because the new crop corn and soybean demand and wheat, for a lesser degree, is probably going to show some weakening due to the Gulf of Mexico. Corn inspections were down 48% versus the last year at the exact same week. So we're still not getting that corn out the door, and that's going to reflect into the 21, 22 numbers in the October report. And what I've told the clients is I really would like to see a low by the end of the month, especially if yields continue to disappoint in those parts we've talked about. But it's really tough to say that when you still have a Gulf of Mexico that's just limping along. So we really need to get that port up to 100% capacity really, really quickly.
All right. Thank you, Mike.
Thanks, Luis. Have a great week.